What's up, everybody, and welcome to Accounting and Accountability Show. Start that again. Hey, everybody, and welcome to Accounting and Accountability, or AAA, a weekly show where we talk about business and accounting in the news. My name is Dr. Amanda White, and I'm a university lecturer here at the University of Technology, Sydney. And with me today is
Dr. Nelson Ma, also senior lecturer at the University of Technology, Sydney.
And how was Norway?
It was great, so beautiful. So I spent about 8 days in Bergen, such a picturesque city. I almost wanted to move there.
Looking at Norwegian academic jobs?
Yeah, Norwegian academic jobs, and then it started raining, and then it rained for like 8 days, and I was like, okay, you know what?
Well, you weren't missing much then, because in Sydney, we had a little weekend of sun, but we're back into the rain. There's flooding in Melbourne, which if you're an insurance company, you're expecting your claims to go through the roof and your profits to go down. So at the moment, last week with Victoria, we talked about AGM season and businesses reporting on their results. And Qantas had a pretty surprising result after a pretty horror few years. How are they going?
Yeah, so Alan Joyce, he gave a profit update basically for the current financial year, the financial year from June 2022 to July 2022 to June 2023. And he predicted that the first half of the year, Qantas is expecting an underlying profit of between 1.2 to 1.3 billion dollars.
Whoa.
That's a big turnaround.
Now, they had been losing billions of dollars over COVID. And you mentioned he's saying underlying profit. What exactly is underlying profit? Is it profit just profit?
Great question. So profit isn't, well, from a statutory basis, what the regulations say, the rules say, profit is basically, all the revenues minus your expenses, all things included, right? Whether it be all your employee expenses, any one-off expenses. Companies, however, like to use this sort of different terms. There's a bit of a marketing here, where they use the term underlying profit to reflect profit that is continuing, where they exclude items that maybe they might not
one-off thing from like buying or selling a factory or something that's not a usual part of business.
Exactly. So in the past, Qantas has been criticized a bit for excluding things like strikes and the cost of strikes off their income statement. While some would argue that strikes are pretty common in the airline sector and in many sectors. And so basically what they've done is excluded one-off asset write-downs on their planes, as well as cash flow hedges or foreign exchange hedges.
So with an anticipated multi-billion dollar profit, the business was in negative equity before, which is a very unusual place to be in. Normally, if you're in negative equity, you're out of business.
Usually.
But Qantas managed to obtain other loans and things for their negative equity. So over time, do they pay down that retained loss or negative equity to try and get themselves more into a balanced position? Is that like over time you should be putting profits towards balancing out all these negatives you've had over the years?
Yeah, well, I mean, it's ideally, you're trying to improve your balance sheet position, and I think getting your equity, which is your
profit saved over time.
Your profit saved over time into a positive position is the goal. But of course, in this current climate, you're kind of encouraged to pay out as much profit at whatever profit you do have.
Dividend
payments,
your shareholders.
Yeah.
The other big thing that's with Qantas in the news at the moment is employees are unhappy. Now, if you've caught a Qantas or a Jetstar flight, you'll know that flights have been cancelled, bags have been lost, lots of service delays. So, it probably, and employees are about to consider going on strike as well, because with COVID, Qantas drastically trimmed down its workforce and then outsourced, which is going to a third-party provider who says they can do something cheaper than they could do it themselves.
So this whole profit thing, it's probably interesting. It's probably not a great time to be making such a big profit now, is it? Because I guess profit's a great thing for a business, but it usually doesn't look good.
If he received a big bonus, if your executives are receiving a big bonus, yet your employees are not being paid fairly, or pay increases are not keeping up with inflation, which we know at the moment is 6, which we think could go to 8 by the end of the year. there's a little bit of, well, what's the social responsibility that businesses have to the people that work for them?
Absolutely, because at the end of the day, profitability is your ability to charge customers more than what you're spending on them. And if their customers are paying a lot for their flights and the flight quality is bad, right? The flights are delayed, bags aren't arriving on time, as you said, and your employees aren't happy, right? And they're getting paid less than what the cost of living is, or the cost of living growth is. It's probably not a good time to be making all this money.
So returning profits to employees in terms of wage rises, hiring more people, on secure work as well, rather than as casuals, can be one way. And this also comes back to, I guess, the ethics around profit. How much profit is a good, is there a reasonable level of profit to make where you go, like, everything else is just excessive? And where do we think about caring for our environment and our people in that space? And, we're seeing that within the airlines and if you're an organisation right now as part of a wage negotiation in enterprise bargaining, which universities all across Australia are, nurses, teachers, not doctors, because doctors don't have a union, but train staff, preschool workers and childcare workers, we're all in these negotiations. If you're management and you're negotiating for wage increases, you don't want wages to increase as much.
No.
Are you going to try and manage your profit in some way?
Well, there is that incentive. And so, there's generally this interesting sort of relationship we see when employees aren't happy, profits tend to be lower.
Or when the enterprise agreement is due to be
reevaluated, profit tends to be a bit lower. So there is this kind of weird association, whether or not it's the company spending more money or employees maybe not working as productively, whatever it is, there seems to be this relationship.
It'll be really interesting to see this track through the university sector, because the University of Melbourne is projecting a loss in the hundreds of millions of dollars after making profits in the current year that's just gone, in 2021 that's just concluded, and they've just reported on. And if you are an employer trying to say to people, we can't afford more for salaries, one way that you could try and signal that is by saying, look, we're not making much money. What is going on? So it certainly is an interesting thing that if you're involved in a business that's involved in its wage negotiation, you can ask these questions about profit and what is forecast, so that you can be sure that your real earnings, which is your pay increase less inflation, is actually hopefully increasing, or at least not going backwards. And so when if you know anybody that works in a university, they'll tell you they're going backwards because pay increases have been about 2% to 2.75% per annum over the last few years, but we know that this year inflation is 6%. So real earnings are going backwards by 3 to 4%, which can make a big difference. If you're doing your weekly grocery shop, my weekly grocery shop for 4 people is now about 160, whereas before it was probably about 130. So we're not, buying more expensive things, but the price of everything has been going up.
Absolutely.
Now, the second story of the week is to do with TikTok.
I
am not on TikTok because it just seems too complicated. It took me like 45 minutes to make a reel that was 45 seconds, just because I'm like trying to figure out which buttons to press, how do we make this work? So hats off to all the TikTok people. But TikTok is this place where you could scroll for hours.
Very addictive.
Very addictive.
Highly addictive platform.
But they make money. How are they looking at making money?
Well, traditionally, they made money through marketing. So, an influencer would post a video talking about this product, and the person watching the video would, sees the product, wants to buy it,
clicks on the
link, and basically TikTok gets a share or whatever.
That affiliate marketing type of approach.
Well, now TikTok is kind of going for a different strategy. Well, at least that's what people are speculating. They haven't said anything specifically, but they're starting to hire warehousing staff, customer service staff.
They don't sell any physical things.
But they don't, not yet. That's the thing. So they're planning an expansion in the US into e-commerce. So what is e-commerce?
E-commerce is this ability to buy goods over the internet, and it sounds super fancy because I can tell you 20 years ago when the internet was just new, e-commerce was the way that, now we just call it commerce because that's how everybody engages.
True.
I do sometimes buy things in a store,
Yeah.
but more often than not, I will check online.
Yeah.
I'll prefer to do click and collect.
Yep.
Even
Much more
than
convenient.
just convenience. So we're seeing this growth. We used to think that the parcel and letter delivery service would be dead. Like, nobody sends letters anymore, but postal services are making a big boom from delivery is the
huge.
big thing because of e-commerce.
Yeah.
So it's the ability to sell a good. You don't have to hold the good, because what's become really popular is you sell something that somebody else holds for you, and then you receive a commission. So it's this consignment type of process.
And so presumably this is going to change the way their financial statements look, whether it be their balance sheet, income statement. And so what happens to TikTok in the long term, and does it make it a more profitable company?
Yeah, well, you think about Amazon has invested in warehouses, technology, people, that there's a lot of contention around unionization and wage rates and what is fair work at Amazon plus delivery drivers. So, they're doing this in the US, so they're going to have to increase on their balance sheet probably leases for properties.
Yep.
You're going to have increased plant and equipment, which is going to be all the machines
like
to store
and
things.
stuff.
Yeah. All the technology that goes with that.
Drones, whatever.
And then people, plus that delivery aspect of it. And it becomes more complicated because Amazon doesn't hire delivery drivers, for example. You contract people. So then becomes all these other questions around contracting. And if you're going to buy from TikTok or buy from Amazon, we know that the delivery service is really cheap. You have to get to a certain level of economies of scale as well to be able to make sure that you're making volume. Now, if I'm TikTok, the other thing I'm thinking about is, if this is only to customers in the US, how do you work the marketing on that? Do you ask influencers to make like their general sales pitch to anybody outside of the US? And then do you have videos that are like, oh, we can see your IP address is from the US or you've chosen that country? Because that could create problems of, you're in the US, you see something on a TikTok page, you go to click on it to buy it, and then you try to get it delivered to, Canada, or you're in Mexico, or you're in South America. What happens if the sale doesn't go through? So there's accounting issues around revenue recognition, timing, refunds, that sort of makes it a lot more complicated. And the income statement's going to look more complicated, and there's a lot more accounting complication in the balance sheet as well.
But there potentially is some upside, right?
There is definitely potential upside, and we're seeing, lots of people looking to influencers. When you go, I don't use TikTok, but if I'm looking to buy something on YouTube, quite often the YouTuber will say, oh, if you click to buy through the link below, like it doesn't cost you anything, but I receive some income for that. And sometimes I do see them say, look, this is the link if you're inside the US, this is the link if you're outside the US. So I think that there's potential, but is this the right time? Because we're potentially about to go into a recession.
That's very true.
If we can't keep a lid on inflation.
That's true. And as we know, in recession, people don't spend as much on goods and services, especially discretionary stuff, which is typically what is being sold on TikTok.
New kitchen gadget or whatever it is. You can't live without this, whatever it is.
Yeah, so it might be a bit of a hard sell, and obviously they're in a very competitive market, right? We're talking about Amazon, Walmart in that same space.
Yep.
They already have a huge market share.
Well, and mind you, TikTok is a Chinese-based company, so why have, and I don't know, if they're already doing this in China, that's very interesting because they're competing with Alibaba and all the other, Taobao and all the other e-commerce platforms. It's interesting that they've chosen the US as the first stop.
Yeah, so maybe
potentially, but maybe because WeChat and all those other platforms are so popular in China.
Yeah, maybe it's kind of like a starting place to then
But it's a good market to start in because it's big.
Yeah.
So even if you can get into 1% of the market, I think we read that 27.3 million US IP addresses made at least one purchase through Amazon. Through TikTok. So they saw a video, they clicked on it. So if you can convert a quarter of those, that's still 5 million transactions. That'll help hopefully give you enough steam.
And presumably they're taking, and if you sell, and the guess the beauty of selling the product yourself is you're getting a much bigger share of the revenue that comes from that.
Yeah, rather than just receiving that affiliate revenue.
Exactly.
So it's my AAA students will know this is a relevant costing question. Like we always think, do you make it or do you buy it yourself? Do you do it yourself? Do you outsource it? So again, they've got accountants doing these sums.
Doing the numbers,
with the marketing staff, with projections and budgets to try and figure out, well, to make this leap and to make this announcement.
Absolutely.
Pardon me. Ugh, okay. Now, it is week 11 of term.
Yes.
UTS students, there is a strike this week on Wednesday. You'll see information on social media. You can certainly ask me any questions if you like. From 9 till 12 on Wednesday, we invite students to come stand with us in solidarity. What is the union asking for? They want fair pay for fair work. We have a lot of casuals who have been casuals for 5, 10 or 15 years. So a path to convert them into full-time secure work. Pay sick leave for casual staff potentially, because when they get sick they don't get to work, as well as targets around First Nations employment of 3.4%, which is roughly the proportion of Indigenous people within the country, which makes sense, and then a pay offer that is in line with inflation so that employees aren't going backwards, because really what it comes down to is over the last couple of years during COVID we've lost heaps of staff, admin and teaching, which means that there's more. I don't know about you, but I've had lots more work to do. Our admin teams are doing a lot more work. We're doing a lot more admin stuff that people used to do, but they removed those jobs. So when our working conditions become your teaching conditions, your learning conditions as a student. So when we have less time to give feedback, less time to actually have classes, we're having problems even getting classrooms on campus to be able to teach on campus classes. So all of these decisions, really come into play. And so what the union is fighting for is great learning conditions for students, which means fair working conditions for staff, both teaching staff, research staff, as well as professional staff. So that's what that's all going to be about on Wednesday, and you'll expect to see that if the university doesn't come to the table, escalations. Make sure you've checked your exam timetable.
Yes.
Because we're in week 11, that means there's only a couple of weeks to go.
Do not plan your holidays before you check your timetable.
Yes. So make sure that you've got your calendar set up. UTS has some great study planners. And we don't have UPass at the moment because not enough students turned up. Nobody turned up, so we had to cancel UPass. But check with all your subjects about when consultations are so that you can get help if you need it. There are no silly questions when it comes time to the end of the year. We want you to clarify those concepts and then get help so that we can see you pass. Do we enjoy failing people?
No, not at all.
And look, if everybody did really well and everybody passed, we'd be happy about that.
Absolutely.
So always best to ask for help, especially if there are conditions outside of your control that are affecting your study as well. Reach out to your teachers and they'll be able to help you get the paperwork and all the other bits to apply for special consideration.
Absolutely.
So hopefully next week we will see you in finer weather in Sydney, but I hope you're all doing well and we'll see you all next time.
Bye.